Hello everybody. In this video I'm going to cover the trades and holdings of the single stock YieldMax ETFs, the long, the short, and then also YBIT. Just a reminder, I'm not a qualified licensed investment or financial advisor. I just gather the data and present it to you here. YieldMax ETFs are extremely risky if you didn't already know. Could lose your capital in these funds if you care. So Friday morning, I thought about doing the video, but honestly I figured, well, it's Friday, they're going to be doing lots of trades, and it wasn't going to matter. So honestly, that's why I didn't do a video Friday morning. Y'all can let me know if y'all would have felt differently, but I was here, and then I started cleaning and stuff on the RV and doing some things to be more productive for myself. But, yes, that's why I didn't. But, of course, I have the trades here. And then it is Saturday morning when I'm recording this, believe it or not, instead of waiting to the last minute. But that's because I'm procrastinating on doing things that I need to do around here. So, here I am. And if you're new, we'll be going over these in alphabetical order for the longs, and then the short, and then YBIT. So we're going to start out with Abney here. Let's see if we had any trades Thursday. So most of these will probably have trades. I don't see any trades here for Thursday. On Friday, they closed out the short call that expired. Was expiring on Friday. 245, 117 strike price. So these are rolled to next week with a 118 strike price. Paid about 16 cents there, as you can see, to close those out. So if we go look at the holdings here, we only have the one short call, the 118, and we are below that by 1% or $1.69. Possible upside here for the short call. And just a reminder, or for those of you that are new, this is just an estimate for the possible upside for the short call. Of course, the stop price could go up more due to the synthetic position. In fact, it should at this point. We're already in the positive. Of course, you never know what's going to happen with market values. Just keep that in mind. Another thing to go over, in case you're new, synthetic. For the long ETFs here, we want the stop price to be above the synthetic. So in this case, we're at 116. The strike price for the synthetic is 110. So that's why you see a positive 6%. And then we have the short call here with a 118 strike price. And we want, again, for the longs, we want that stop price to be at or close to, but below the strike price for the short call. Of course, if it would be the opposite for these, for the short ETFs, which then they would be short puts though, versus a short call. Oh, and those also have long calls as well, if you didn't already know that. And then, so if you don't want to look at all of these, just fast forward, since they are in alphabetical order, or once you see the pink labeled tickers at the bottom, if you're just wanting to look at the inverse, those, and then remember YBIT's last. I don't think there's anything else here for me to point out. I was working on something else over here, but I don't know. I think I'll just leave that for myself, just because I don't know. I don't know. Actually, in this case, it would probably be fine, because Abney here is only has one short call. So I was just building some things over here. Of course, this is going to sum up these. Of course, if it has multiple here, then some of those short calls can cancel the other out, depending on the strike prices and the number of contracts and everything else. But in this case, It shows a 23-cent upside, which is about 1.43%. And then I just have a ranking. Now that ranking is based on, summing up some of these that, summing all of them up, just to give an example, like here. We know that once this hits 152.50, this is going to go to zero, so this would have maybe gone up 20 cents or whatever, the stop price based on the short call. But then once it hits this, once you go over it, now it's going to be negative, right? Because we would have to pay to close those out, even though this one's going up, so those could cancel each other out. Of course, then they may not as well either if the synthetic is going up by that price. So anyway, it may not make sense to do it. It was just something I messed with this week. And just to show you here, so this adds those two up, and then of course a percentage upside of possible for the stop price, which then in this case you can see it ranks number 5 overall. So I don't know if it makes sense to do that. I was just, again, messing with something this week. Just looking, another way to possibly look at it, especially for you, those that might swing trade these maybe weekly, or, you just want to see before you buy something that week the possible upside with all the ETFs for the week. And looking at that percentage. So I don't know. Again, just messing around with it. All right, I will move on. We'll just go to AIYY. No trades on Thursday. Friday, they closed out the 2 short calls, the 25.50 and the 26. Looks like they've rolled those to next week to 26. So it looks like the stock price actually closed at $25.49, 1 cent away. But I guess because these were closed out earlier in the day, they paid 39 cents a share to close those out, and then 5 cents a share to close these out. So basically the premium they got for this, one of those paid for that closing those 2 out. All right. So if we go over here, we can see we only have the 1 short call this week. $26 strike price, which are under, it says 2%, which is only 51 cents. And then earnings, well, I think earnings might be the first week of September, but previously it had been the last week of the month, but I think it's September this time. But anyway, so you can see that 20 cents, so it shows a possible upside of almost 2% there. All right, AMDY. So Thursday we did have some trades, so they closed out. Sorry, I did end up changing the color codes yesterday, so there's going to be different color codes here. But AMDY, they closed out the 141 and 143 strike prices that were going to expire on Friday. Of course, you see the stop price is at 147.36 at the close of Thursday. Which makes me wonder where they closed, 148. So yeah, they were up more. But anyway, our new strike prices here are 152.50 and 155. It ended up costing almost $3.2 million to close those out. And then if we go over here, what they did here was the synthetic. So they took the, let's open that some. The 140 synthetic with the expiration of September 20th. Yeah, I don't know that I would want anything expiring in September. But anyway, new expiration is October 18th. And we went from 140 to 145 strike price. And they ended up bringing in about $3.4 million. I wonder why. going on. Yeah, because if you look here, if you take their money market and their cash, they were in the negative. So that's why. So if we look now, yeah, they're not in the negative anymore. All right, so we have two short calls here, 152.50, 155. We're underneath those 3 and 4%. Possible upside here for these short calls. We're looking at about 20 cents there. But again, like what I was talking about over here, this is adding these two. Now, again, if this stock price goes up, then if the synthetic can go up by help push this up to here, then this would make sense. But I can't know the real percentage increase on how the synthetic is going to react, because I've seen it sometimes barely move as the stock goes up. Of course, that's usually when it's still negative. And then I've seen sometimes it go up with no problem. So anyway, this is showing, about a 3.3% possible upside. But that would be the estimate for the short call and a long call. But again, I haven't done this like this before. I've only ever done looking at the short call itself. So again, I'll keep an eye on this and see how this shakes out. Maybe do a test on it. Of course, I'd have to find ones that actually go up to those prices, right, to see how far they actually go up. Yeah, that's it for AMDY. So let's go to AMZ. AMZ on Thursday, they closed out the 172.50 strike price and rolled that to a 182.50. You can see here the stop price on Thursday at close was 177.50. Yeah, they ended up being at 177.06 yesterday. But anyway, they ended up paying, let's see, $1.72 million to close, or to roll those. Now we had trades here. They also had a 170 strike price here that was going to expire on Friday. They paid $8 to close that out, 4.84 million, and then now they've rolled this to next week with 182.50 strike price. Of course, they only received 93 cents a share for that one. And then we have our synthetic here. They went from a 165 to 175 strike price, so up $10 with the same expiration date. So they got $15 million for closing that out. But overall, they received $10.1 million. So for the synthetics, so we look at all of those trades there, $5.85 million. So then looking here at the holdings, we only have one short call now, which is that 182.50 strike price, and we're currently underneath that 3%. Gives us a possibility of 58-cent upside here. For the short call. So I just thought of something, and that the ranking wouldn't make sense because in this case, because like I said up here, if we're saying, oh, well, maybe the synthetic will help, right, will offset the fact that that one's going over that one strike price and whatever, right? But down here, when you don't have that and you only have the short call, well, then this is only giving you short call, data. Doesn't give you a possible upside for the synthetic, unlike this one I'm saying, this would basically be the short call, and if it goes up to here, it's the synthetic. So now that I'm looking at this, these are two different things. Of course, if you're, and that's as far as ranking wise, if you're trying to look at, which one has the most upside, then using this and trying to rank them isn't going to work. If we're looking at this individually, right, if I just want to know, okay, I own AMDY, what do we look like? Or the certain stocks like NVIDIA and Misty and Coney and those that people like. But I don't think doing it this way would be able to, the only way that I'd be able to make it fair would be like, say, this is only 20 cents. So maybe that's what I changed this to only, well, then it means going back to the manual way. I basically was doing it before when I do videos, and I basically just look at the shares, right? And I look at this, and this is like, okay, I know it's going to go up to 20, but once it gets over that, we're going to start going far negative more than we would going up because the majority of the contracts are here. So then I'll just say, in this case, right, it's on the upside of 20 cents. So I would have to manually put 20 cents there. But then that's not going to be the exact same thing for all of them. All right. So anyway, I just thought of that. So then I don't know. So like this one down here is a different example. The reason you wouldn't just do the first one, because on this side it would be more upside because the 1/4 of the contracts are here, and here's 3/4 of the contracts. I know if you're just investing in these holding, you don't really care, but if you're somebody that's looking at these and wondering a potential upside, you don't want to spend a bunch of money on something that's already been capped and, you know, maybe only has a few cent upside for that week. Of course, if you're holding it for the long term, you don't care. But, all right, I'm getting sidetracked. I apologize. So here we had about a 3% upside there based on the short call alone. All right, let's move on to Apple. So they had $217.50 strike price. The stock price closed on Thursday at $224.72. They paid $7.37 to close those out, or to roll them to next week with a $230 strike price. So overall, they ended up paying $1.3 million to close those out on Thursday. And then on Friday, they closed out, okay, they only closed out some of them, 2,000 on Thursday, and then the other 2,000 on Friday. Yeah, so they paid just a little bit less, still about $7, about $1.4 million to close those out. And now they added to the 230 strike price, but they also had the strike price of $227.50, which is new. So they didn't receive much premium for those two, only a couple of $100,000. So in the end, they still paid around 1.3, was it? Sorry, 1.2 million-ish. So Apple here, $227.50, $230. Underneath those straight prices, 1% and 2%. Possible upside here, maybe about 15 to 20 cents for the short call. Let's move on to BABO. Sorry, I should have just clicked here first. Okay, we had two short calls on Thursday, the 83 and 87. This was, I guess, after earnings, because earnings, I believe, was Thursday morning. So they had done these trades during the day. It looks like they, well, no, it's odd. So they changed the difference. So we went from a 83 and 87 to a 83 and 81, and they didn't just roll those with the same quantities. So looks like we went, which actually that's crazy because we closed at like 83 something on Friday. Okay, anyway, let's stick here. Anyway, they got a little bit of premium over here for these trades. Let's look real quick. 29,000. But yeah, no trades on Friday. So let's go look at the holdings because I know they went up. Yeah. So this one's already over its strike prices for next week. So here's one. I don't know. I mean, me personally, just watching BABO over the past, I don't know, 6 months. I wouldn't say a year, but maybe 6 months. It's really hard for it to get up above this stop price. So I know it went down on earnings and then sort of tried to go up, and it's sort of wishy-washy, and we're at our max, and I don't know if it's going to keep going up or not. So me personally, I'm not going to buy any of this next week unless maybe the stock drops a lot, but I wouldn't be buying it in at this price. Just because I know there's no upside this next week unless they make some trades, right, and change around these holdings. And then also I see the potential that this is possibly just going to go back down. So that's just my thought process. I think this was the only one over the strike price. But I could be wrong, but I think that was the only one. But you can see we're over the 81 strike price by 3%, or $2.18. And then we have the $83, which we're over by 18 cents. All right, so let's move on to Coney. I forgot to put these in order, but it doesn't look like we had any trades for Coney on Thursday, but on Friday they closed out the short calls. So they had the 200, 202.50, and 207.50 strike prices that were all going to expire on Friday. So now it looks like they've rolled these to next Friday with a 212.50 and a 215 strike price. And as you can see, it costs some money to close those out because, well, assuming right, the close of Friday, Coney was at 205, which was above most of the strike prices here with most of the contracts. The only one that wasn't actually over at the end of the day was the first one listed with the 207.50 strike price. They closed those out for 20 cents a share. But the rest of them cost them a little bit of money. So let's look. $7 million. Oh, and that was just to close them out. And then they received, to open the new ones, $9.5 million. So it actually paid for itself. I was wondering why they didn't close out synthetics, but that's why. It actually paid for itself. $2.5 million is what they received. So then if we go over here to our trades, we have the 2 short calls, the 215.50. I mean the 212. What am I saying? 212.50 and 215. Man, they're below those 3 and 5%. If we look here, Thursday they were actually under those strike prices. I think all of them, right? Because they were on the 200s. Yeah, 200, yep. So it's a bad break there, but at least they still made money, right? So the majority of the contracts, I mean, they're almost split there, but the majority are at the 215 strike price if we were just looking at the for the upside here for the short calls are looking at about 30 cents. Again, I'm just looking over here, but again, this is going to add these two. So his assumption that the synthetic is going to go up, which would, would make sense here to be able to make up. So I say 30 cents, right? That leaves about 35 cents on the table. But if you look, these strike prices are $212.50 and $215. That it means if it got to that $215, it would be above the synthetic strike price. And right now, the synthetic's bringing that down 28 cents. So with the assumption, which is, again, is not always the case, if the stock price gets above the strike price, then there's more chance of this, or the further it goes above it, that this would be green, meaning the possibility that this could go up 28 or so cents to make up for that 35 cents on the table. So again, you could be looking at about a 4% increase here to Coney's stock price for, a possible synthetic and short call if we get up to the 215. But you can't use that ranking over there because this would not be fairly ranking these to each other. All right, let's move on to Dizzo. I guess I'll need to start speeding up or we'll be here all day, right? Dizzo short call, $87 strike price. I saw Disney at 88 something, I think, on Friday. But anyway, 87. Oh, look at that. Yeah, it closed at 89.30. I didn't realize that. So our new strike price for next week is $91. Don't worry about the red S. It's just because it was coded wrong, so it messed my formulas up. But I didn't change it. But you see, it should have been SS versus an S. But it looks like they paid almost $500,000 there to close those out. So if we go over here, $91 strike price. Underneath that 2%, $1.70. Possible upside here of about 29 cents, almost a 2% increase. Phoebe. I have to remember to come back to those shorts. We didn't have any trades on Thursday. On Friday, closing out that short call with a 525 strike price, or rolling it to next week with a 540 strike price. You can see that we were over the strike price at the end of the day on Friday. We were over at $2.42. But I think this is one of the few that actually went down during the day. Yeah, so this one went down $10 a share. So they probably just assumed Meta was going to go up like everything else was, and it did not. So they ended up paying $5 a share to close them out. However, they were only $2.42 above it. But the premium they received almost paid most of it. So they ended up paying $252,000 out of pocket. And we look here at the holdings, we only have that 540 strike price, which is basically what the stock was almost at on Thursday. So we're underneath that 2%. Good news is we're still above the synthetic strike price. A possible upside here of about 44 cents or 2.3% for the short call. GDXY. I don't know how many of you have been buying this one, but supposedly we're going to be, as we go into the recession, supposedly more, or soft landing, whichever you think, that more people will be investing in gold and stuff. So I think I've bought a few more shares of this due to that. So if you're doing that or whatever, let me know what you think or what your thoughts are on investing in gold or GDX or GDXY as we go into this next year to cuts and everything and possible recession. All right, so this is Friday's. These are Friday's trades. Short calls that were going to expire on Friday with the 36 and 36.50 strike prices. As you can see, stop price was actually at 38.49 at the close on Friday. They ended up paying $1.35 million to close those out. And now we go into next week with a $39 strike price. So we're only underneath that 51 cents. Of course, if we look here for those three, it's going to cost $1.1 million. So the synthetic, they moved it from a 37 strike price to a 38 strike price from September 20th expiration to October 18th expiration. So this one was negative 1.13, and they brought in 600. So that offsets some of the costs there, but they were still negative 522,000. So now their cash is in the negative, but they have just enough here in the money market account to cover that. And so this one was capped. So even though GDX went up yesterday, was at $1.20, the stock price only went up 9 cents. Yeah, and it sucks because GDX is about, double GDXY, so you would assume, right, if GDX went up $1.20, that GDXY would have went up 60 cents. Of course, again, it was capped, so that hurt a little bit. That hurt us getting back to about $19 a share. Anyway, I'd already mentioned it, $39 underneath that 1%, but only 51 cents away. Possible upside for the short cost, 24 cents, which is about 1.3% there again, just for the short calls. Let's move on to GUI. So GUI Thursday trades, he closed out the short calls 167.50 and 165. He closed them out for 6 and 8 cents. And then for next week here, we have a 165 strike price. So we closed at 161.30 on Thursday. No trades on Friday. So let's see where we closed at. 162.96. Yep, that sounds about right. So we know Google's struggling at this moment, but we have the short call, that 165. We're only underneath that 1%, which at this point is $2.04. Possible upside for the short calls is 19 cents, which is 1.24%. JPMO. We have trades from Thursday. They closed out short call with a 207.50 strike price. The stock price is at 211.55 at the close on Thursday. So that cost some money, a little bit of money there to get that closed out. Now we have a new going into the week of a strike price of 215. Overall, that ended up costing about $175,000. And then if we go to Friday's trades here, so hold on. So it looks like they didn't close all of them out on Thursday, because here we go into Friday and they're closing out more here. So again, to a 750, we're going to, now in this case, we're going to a 215 and a 217.50 strike price. So we were up to 213.97 though at close. Overall, let's see. It cost 400,000 to close those out, and then overall trades together was negative 329,000. So looking here, sorry, gotta drink some of my coffee. You know, looking at these, you know, you think about it with some of these, they really suck. But as far as when you know, this happens. But if you look at the stock prices of some of these, right? JPMO closed at $19. How many of these funds can say that they can do that? There's like several of these, like nobody liked Apple or even GUI or some of these, but they have held up. A lot of them have held up better, right? Because of the lower volatility as far as if you're looking to preserve your NAV versus the dividend. Of course, for those with the dividend, you may not be preserving the NAV. Of course, we know we have the outliers like NVIDIA and Misty. Coney's still not, Coney is a little bit lower, but it has been out longer than like Misty. But it's done pretty good, even though I think it's down to $15. But anyway, okay, sorry, random thoughts. So JPMO, we have the 215, 217.50 strike price. So that one says 0%, which is the majority of the contracts. We're actually under it, $1.03. So only about 6 cent upside here it's showing. And then we have the 217.50 strike price, and we're underneath that 2%. Murney. So no trades on Thursday. On Friday, they closed out of the $87 short call. They paid 23 cents. Good job. Really good job. It actually ended up closing at 86.84, so they were right under it. But now we have a new strike price of $90. So I hope this slowly goes up to, you know, hopefully recover some of its price that it's, since it's down so much. But anyway, let's move over. I don't know how much you actually care. Obviously, there's not that many people out there that care to look at these or the trades or the holdings, but I don't know. I like following it and knowing what's going on with these. I didn't realize MSFO was up to 20, which I guess it happened on Thursday. That's a good one. Sorry, I'm off track. Murney. Wow. So we have two short calls we have for next week, 86 and 90, and we're already over the 86. So that sucks. Of course, it's brought us up, the stock price. We're up in the $11 some here. Stock price only came up 11 cents on Friday, but Moderna only came up 22 cents. So that's actually pretty good considering the huge stock price difference. But anyway, sorry. So 86, we're above that 1% or 84 cents. And then we have the $90 strike price, which are below 4%. The majority of the contracts are at the $86 strike price. So, yeah, I don't expect an upside here for this. And I think I want to change my formula there, because I don't have it to account for if, you know, any of them are over. Hold on. All right. So now we're going to move on to MSFO. No trades on Thursday, and then on Friday they closed out the 412.50 strike price. Of course, we were over that, so they paid $7.10 a share to close those out. And then now this next week we have a 425 strike price, so paid about $900,000 for their total trades. We can see here they only had the 425 strike price. Of course, we were at 421 on Thursday. Friday we closed at 418, so this one also went down some. Possible upside here of about 31 cents for that short call, which is about 1.5%. All right, Misty. No trades on Thursday. On Friday, they closed out the 141 strike price. Yeah, that was, I think Misty might have got up to 134 Friday. I might have. Oh, I sold shares, but it's only because I was swing trading it. Which, by the way, MSTX. So I didn't share it. I saw in the email saying it came out. And one, I didn't, well, there's two reasons I didn't share it. One, it wasn't, well, one, it was Defiance, and sometimes I do share Defiance stuff, but I usually just leave that to Max. But then the other thing is it wasn't, a covered call ETF or anything. It's MSTX. I think it's 2 times leveraged or whatever. But for anybody out there that was trading, swing trading, MicroStrategy, or anything like me, now we have MSTX. And actually I said Defiance. That's wrong. Is that Defiance? I feel like it should be Rick's shares, but it doesn't make sense to be Defiance. I don't know why Defiance is in my head. MSTX. It does say Defiance. Oh, it's only 1.75. And I say only, that's actually for MicroStrategy, that's probably all it needs to be. Hold on, because I feel like now that I'm going crazy. So Defiance. I'm sorry, I'm talking to myself out loud. I'm typing this on my phone. Clearly, I'm not thinking straight on who's doing what. But because I felt like I was going crazy the other day when I saw the inverse Qs on YieldMax. I'm like, I don't recall seeing any announcement. And then all of a sudden there were trades. And of course later that night they did the announcement. I felt like it was sort of late though, because usually they let us know ahead of time. And I was searching her X page and I couldn't figure out what was going on. All right, so now that, so I'm looking at the Defiance website. And I do remember now seeing the Lily, LLYX, 2 times long. And I didn't think anything about it, I guess, at the time. And now that I'm thinking about, there's the Misty. So these, okay, and then URAX. I remember seeing that too, but again, it didn't really pique my interest. So I guess I didn't realize that Defiance was going to start doing these daily target funds. Like Rex shares. So that's new. So I'm sorry, we're in the middle of a YieldMax video. I know, my bad. And if you're fast forwarding, you're missing out, and you're probably happy to be missing out. But yeah, so learn something new. But Lily, though, I don't know. Misty has been my thing, or MicroStrategy has been my thing, and I've done pretty decent with that. So, all right, okay. I'll get back on topic. MicroStrategy, 140. We closed out the 141 strike price for 18 cents a share, and now for this next week is a 138 and a 138.50 strike price. And then, yeah, so we changed out the 141 for the 138, and then they added, this is actually the first one out of all these trades on both days and all these ETFs that is actually, or that I paid attention that actually added. So this one added 800, which makes sense, right? Because MicroStrategy has been going down, or Bitcoin's been going down. So MicroStrategy, of course, it's really not down too much. I know this says 130, but 1,300. I mean, it's been, down in the thousands in the past few weeks, but so it's brought Misty down a little bit here. All right, sorry. Let's just jump on over to the holdings. So yeah, we're at like a $23 stock price. So that's good because most people didn't want to pay $30 to begin with. So actually, I think, did I buy some yesterday or did I sell some? I don't know. I might have bought more Misty and sold, and then just, I don't know, traded some of the MSTX. I don't know. Now I've got to be careful because I have Misty, MicroStrategy, and then MSTX, the Y, R, and X differences. All right, I'm sorry, I'm getting off track again. All right, short calls, 138, 138.50, and 140. The majority of our contracts are at the 138. So possible upside here of about 81 cents. And those other 2 cents isn't going to make this off too much, but we're looking at about 3.5% increase, possible upside there for the week. So if that went up about $1, about $24.50. I could have sworn it was at like 24.5 during the day on Friday, maybe Thursday, I don't know. But anyway, Netflix. So we did have trades. I don't know if y'all can hear it. My cat's scratching her chin. So loud. But Netflix. Trades on Thursday. So we had a short call that was going to expire with a 640 strike price. And do you need me to scratch that for you? My goodness. 640 strike price, and they've rolled that to next week with a 675 strike price. So it looks like that cost them about $500,000 for both of those. And then then we had the synthetic that also was expiring on Friday. I was looking at, they paid $15 a share for the put there. And then we closed at 663, so 12, so that's not too bad. But anyway, so they closed out the 675, and now we have a 660. And we went from, obviously, expiration date of yesterday out to October. I think they're trying to get most of them moved out to October. So as they start closing out some of the, I'm six and a lot of my live, right? Just looking at NVIDIA down here, but with looking at the rest of them that we've looked at today, I think most of them closed out when they closed out the September 20th, they went ahead and rolled it to October 18th. In this case, they didn't for NVIDIA, but we're not on NVIDIA, are we? So we'll see. But let's look and see how much all of these together. So $3.2 million that they ended up paying out for these trades. Let's see where we were at. Well, let's see if we had any trades on Friday. We didn't. Okay. So here, Netflix. Wow. Is that really what just happened? So we went from a 640 strike price, so that's what I missed. The stock was at 663, so we were 4% above the strike price when they closed it out. And then they closed it out, and then our new strike price, for our stock was only 2% below the new strike price. And now here we are, and that, of course, that was Thursday. And here we are on Friday, almost maxed out. Our stock price is $274.07 for Netflix, and our strike price is What am I saying? I don't even know if I said those numbers right. Netflix was at $674.07, and the short call strike price for next week is $675. To me, yeah, you're just already at your max, because possible upside is 2 cents. It can only go up 93 cents. So possible upside is only 0.14%, or the 2 cents for the short call, of course. So yeah, this would be out. I wouldn't be buying this one unless the stock price goes down next week. But I'm not buying it up front, knowing that it's going to be, the upside's going to be capped for the rest of the week. All right, let's move on to NVIDIA. NVIDIA here on Thursday closed out this short call with a $111 strike price. Of course, they were 11%, $13 over the strike price when they closed it out. So they paid $11.20 a share to close those out, which was almost $75 million. The new short calls, $130 strike price, and they only received $380. Of course, it looks like some people must have closed out of this. Let's see. So all those 150s. Yeah, the 7,300 shares were closed out, which is interesting, right? Of course, people could have been like, oh, this is capped, and we're going to sell this, or it's getting high, and we figured the market's going to come back down, so we're going to sell some. But 7,300 contracts were closed out. So you can see the difference here, but you can see these separately here. So then they closed out of 30,000 there, the 115 strike price, and rolled them to the 116 strike price. And that again is because here for the short calls, it's costing $52.2 million. So they need that much money. So 52.3. Let's just look at the holdings from the day before just to see where they were at. Of course, I'm just looking at one part of the puzzle. They're looking at the whole when they do that. Yeah, so this is Thursday's holdings, and they only had $5 million. They were already negative $33 million in cash. And then they had 38 in the money markets. Only had $5 million. Sorry, which one am I on? So we're only on this first one. So they only had $5 million. So by closing out, let's look. So one, closing out the 7,300 that they had to do for the synthetic, they actually brought in, $5.6 million. Obviously, that's not making a dent in anything in this case. But if we look at these 30,000 here, they brought in about $424 million for those. So even that still is not covering it, right? So if that's 24 and the 5, so we're almost 30 million, and we were negative 50-ish million. And wow, then we look at the open, and they paid even another 21.5 million, or more than 21 million. So let's just look at this, because that tells me they're still way negative. They are still way negative after all of that. So basically, all these, I don't like how I have these split up. And on an iPad, I can't select multiple cells to try to add them together. Let's see. I've got my handy dandy phone though. So we have the 30,000 there, that they received minus for the 30,000 contracts they paid plus what they received, and then minus the 3, 8, 6, 7. Okay, I think I had too many zeros somewhere, so we're going to change this to thousands. Wow, so even after just looking at the synthetics, the 30,000s, the closed and open lines, they only brought in 2.88 million after all of that. So yeah, let's just look at this total. Yeah, $44 million they still had to pay out. They were already in the negative, or they only had 5 million between the money market and whatever and the cash. So if we look over here at the holdings, yeah, they must have taken money out of treasury, or maybe people have been buying in and that bought in, and that helped replenish some of that cash account. Because let's see, I guess we'd have to look at the, let's see, it's hard comparing these, right? 241, 241. Okay, so the treasury, what did I do? I moved it. So the treasuries remain untouched there. Sorry. So you can see there the treasuries are the same at the top, or, roughly the same. But we went from here having 5 million in cash there we go. So what I failed to do is sorry about that. So these are the holdings from Thursday. So this already accounts for these trades. So that's why there's only 5 million left after all that. It's because I had to have these, I moved this tab over. Usually it would be over here, but I moved it over to not forget to cover it. So after these trades, then we were at 5 million. Then on Friday, they closed out here of 29,490 contracts. The 115 strike price to the moved it to the 160 strike price, 16 strike price, but this almost looks like a wash. So they got another 2.8 million. All right, so then that takes us to our holdings here. So now we only have one synthetic versus two, and that's the 116 strike price, and we're above that by 7%, bringing the share price up $1.86. I didn't realize NVIDIA got up to $25 on Friday. So it makes me want to look at something. But then we have our two short calls. We have a 124 and a 130 strike price. Of course, a third of our contracts are at the 124 strike price, and we're already over that. We're over it by 58 cents. And then the other 2/3 of our contracts are at the 130. So if we use that logic, and it's saying over here, 79 cents to go up. But again, you're going to now start having to, pay money to close out the first one. So it'll be going negative again, only looking at the short calls there. I would be looking at this thinking, okay, the short calls have an upside of, actually, I don't even know why I said third. It should be fourths. So 1/4 of the shares are at the 124, and 3/4 of the shares are at the 130 strike price. So maybe about 60-cent upside here. Now, if we go to the logic over here on the side of just looking at this, with the total 76 or 79 cents, whichever one you want to look at that there. The synthetic's going to go up as well. We're already in the green here, but we're looking at about a 3% increase just based on the short call, because I know there's only a couple of cents there. All right. Sorry, I'm looking up something because I think I placed an order the other day for something. Yeah, I had sold some shares, but it was only 5. I don't know why. But for some reason, I remember doing something. All right. Well, that sucks. All right, we will see how this goes. We also closed out Thursday at $25. I didn't realize that either. So let's move on to OARC. So Thursday, we had some trades here, closing out the 42.50 strike price, and at a 42.50, and now we go into next week at the 45 strike price. We can also see that they closed out 890 contracts, so the short calls are 890 less, and then you see these synthetics here closing out the 890. Overall in trades, paid out almost about $2 million there. And then let's move over here. We don't have any over here for OARC. So if we look at our holdings, we only have the $45 strike price, which is also our synthetic strike price. So underneath that short call, 2% or 91 cents. So possible 21 cent or 2% upside here for OARC's strike stop price for the short calls. Sorry, I'm looking at all the different price changes here. All right, so let's go to PayPay. So on Thursday, they closed out 66 strike price for the short call and moved that to next week with a $70 strike price. I ended up paying about $350,000 to do that. And then on Friday, we have a $67 strike price here. That's interesting. I don't know that I've ever seen that before. $60 strike. Stock was at $67.96, and they paid the 96 cents. So I wonder if this was right at close or if the stock was down at some point during that day. But anyway, so now we have a new strike price of $70 there for next week. All right, so they took the synthetic with a $60 strike price expired on September 20th and moved that to October 18th to $67.50. So overall, they ended up bringing in $2.84 million there. If we look here, we can see the one, our new strike price, the $67.50, and then our short call for next week, $70 strike price. We're underneath that 3%, with a possible upside of about 53 cents here, or 2.9%. Snowy. No trades on Thursday. On Friday, they closed out the 126 strike price, and the stock closed at the end of the day at 128. So they did good. They must have did this really early because they only paid 78 cents to close this out versus the roughly $2.04 they were over the strike price. So next week we have the 138 strike price. They're expecting this one to get back close to what it was because this was in the 140s not too long ago. But it looks like they brought in about almost $300,000 there for these trades. But let's look at the holdings here. We have Snowy, 138 strike price underneath that 7%. Oh, that's right, this one. Because I was like, why does this one have such a whatever? Because it has earnings. this week. So hold on, let me look that up real quick and I'll tell you. But I'd already looked it up when I saw the trades yesterday when I was working the file. Because I've noticed, this last big earnings that you could tell who had earnings for the week, because those are the ones that were, the strike prices were further out. So post-market, August 21st. My cat's losing it. So after the market on Wednesday, according to Moo Moo. So this one interests me. With Snowflake, but we also have some possible upside here. The bad thing is, right, what if the stock market goes down next week, right, and you buy a bunch into this? Or what if the earnings or their outlook, because to me it looks like the earnings isn't so much, it's their outlook and guidance, right? But looking here at that 138 and being under at 7%, we're looking at an upside of about $1.35. If that was the case, we would get back up to about $20, and that's just looking at the short call, right? So we could, go up more based using the synthetic. And my cat apparently is knocking a bunch of stuff down, going crazy. It's awesome. So anyway, looking at about 7.2% increase there just for the short call for Snowy. All right, then we go into SQUE. No trades on Thursday, and then on Friday they closed out these short calls. They had strike prices 63, 64, 65. The stock closed out on Friday at 65.87. So it ended up costing them over $1 million to close those out. It looks like new strike prices for next week are 67 and 68 strike prices, which are only underneath those 2 and 3%. But let's look and see if we had some other ones here. Nope, just those two. Underneath them, 2 and 3%. Possible upside here. The majority of the contracts are at the 67 strike price. So if we're just looking at those, we're looking at a 20-cent upside there. Sorry, my phone was going off over here. All right, so let's go to Tesla. Tesla on Thursday. Let's see. They closed out the 260. Okay, so their synthetics was going to expire on Friday. So the strike prices for those was 260 and 265, costing them $152.1 million to close out. Because they were so far. They were 18 and 19% below the strike prices. The new synthetics here, 210 and 215. And it looks like it cost, still cost a bunch of money to even open those positions. So let's just look at the closed ones, because I missed the $6 million when I was taking that calculation. So $159 million to close out, $20 million to open. So $179 million total in trades. I guess they just had that sitting in cash, because that's crazy. This is Thursday's holdings, which means this would have already accounted for that. Yeah, apparently so. So let's look. Oh, we were already there. Sorry for the scroll. I guess I went too fast there. Oh yeah, they had 213 million in cash. All right, crazy. Okay, let's look at Friday's trades. Friday, they closed out the short call. Let's see, we have 207.50 and 210 strike prices, and Tesla was at 216. So they paid quite a bit, over 32 million to close those out. Then our new short calls are 227.50 and 225. And then they closed out 2,375 contracts of the short call and synthetics here. So people must have sold out of this fund. Overall, they paid another 23 million to close these out. So this is where we're at after the 2 days of trades. We have the 225, 227.50 strike prices underneath those 4 and 5%. Almost all of the contracts are at the 227.50 strike price. So looking around 65-cent upside or so there, or about 5%. So that would get us back in the 14s if we could do that. And this is assuming the stock market goes up next week. Of course, we're negative in cash here now. All right, Zomo. Make sure. No trades on Thursday. I guess no trades on Friday either. No, it's because it already had a short call expiring next week. All right, so Zomo here, short call 121 strike price. We're underneath that 2%. Possible upside here of about 41 cents for Zomo, or 2.3%. All right, so now let's go into our short ETFs. So Thursday, I did not pull them out, so they're in alphabetical order still. So no trades for Crush on Thursday. And then on Friday, apparently I also stopped putting the lines on these. So Friday. Yeah, these are not. Let's see. No, that's right. Okay. Trying to see. So they closed out, these are sort of a weird order here, 75 contracts for people selling out, and that's what the first two and last two lines are. The middle two lines is where they close the short put with 537 contracts at the 192.50 strike price and move that up to a 210 strike price for next week. Overall, it's not quite a wash. Let's see. They got about $48,000 there for those trades. So if we go over here, we can see that's not right. So I need to swap those. And that's what I was doing at the last minute last night. That's what I get for being distracted, because my daughter was talking to me. So, I'm sorry, I should have warned you I was going to scroll up. So the first one, let's see, that's hard typed. Actually, I can copy both of these. Copy. Paste. Hold on. Let me just double check something. Well, I shouldn't have it, yeah. That's weird. If that is blank, then it should be blank, so I don't know. Okay, just disregard that line. I don't want to delete it. I don't know why, though. Let me do this. It's not going to hurt anything, but all right. So short put is supposed to be the first one there, and then the long call. So we can see that we're over the short put by 3%. and that it's green. On the other screen, because I have the names swapped, these right here are going to be the wrong colors. So I'm not going to change them on this sheet. It's not going to make a difference. Oh, I can't do it, can I? Just in case I look back on this historically for some reason, just to show I have those swapped, because I'd have to add the formulas and everything else back, because this doesn't have formulas anymore in order to save the historical data, right? So let's look at dips. So we did have dips here on Thursday. They closed out the short put with the 101 strike price and rolled that to the 119 strike price for next week. They did bring in almost 67,000 for that. And then on Friday, they closed, it looks like people sold out of this, so they closed 100 contracts across the board there. So you can see that cost, let's see, $186,000. So if we go look at the holdings here, you can see we have a short put of 119, or about that 5% there, and then all the numbers that go with that. Of course, you can see that synthetic with that strike price of 105, and it's over at 19%, or roughly $19.50. So it's bringing the stock price down $3.10. All right, so let's go to fiat. On Thursday, we had trades, short puts closing out 175 and 185 strike prices for those expiring on Friday, and then they pushed these out to next week with the 190 strike price. They brought in a little over $100,000 there. And then there's nothing here. So if we go to the holdings, we have see that short put with the 190. We're above that 8%. And then YQQQ on Thursday, we didn't have any trades on Thursday. And then on Friday, you can see here that they closed out of 2 contracts right there. All right, so if we go to the holdings here, we can see our short put at the 456 strike price, which we are still above by 4% there. And then we will wrap it up with YBIT. YBIT on Thursday closed out at the 2050 strike price and rolled that to next week with a 20 strike price, bringing in about 730,000. No trades on Friday, so you can see the $20 strike price underneath that 3%. BABO, that's an interesting. BABO went from 1856 to 1945. Good for it. So YBIT went from 1393 up to 1444. Possible upside for this next week, which is only 55. We're only 55 cents below that, but it also, 30%. Possible upside of about 40 cents here, or about 2.75% for YBIT short call, or the YBIT stock price based on the short call only. Anyway, I know this was an extremely long video. Of course, we're covering 2 days of trades, and it was Thursday and Friday trades, so we had a lot. But anyway, I will talk with y'all later. Bye.